Let's get a closer look at the technicals after a volatile week. Joining us now, Carter Worth Charting founder and CEO. Carter, great to see you.
Thank you.
So we've got the benefit of hindsight. So what do you make of the action this week?
Yeah, I mean, a couple things come to mind. The first thing, of course, is that as of now, it's all fairly normative. Let's just put it in context. We know that the high for now was the 16th of July, and this sell-off is 14 sessions in the making as of Monday's low, down 9.7%. To put that in context, there have been 241 instances in the inception of the S&P in 1927 where you've had a 5% plus sell-off. And the average decline is 8.2. The median is 11.8. So put those numbers in perspective. 8.2 down, 11.8, and this one's 9.7, smack dab in the middle of the average and the median. In terms of duration, 3 weeks. They typically last 3 or 4. But here's the issue, in my mind. That's average, medium. And typically, that's not coming from such a complacent setup, right? We know we'd gone one of the longest stretches in 15 years without a 2% move down or up. And because of the steep and uncorrected nature of the preceding advance before this 9.7% sell-off, my hunch is that this one will not be average or median, and just off we go to the races, that it'll be longer in terms of magnitude or duration.
Carter, what was most notable in terms of how the market sold off is that even so far this week, the Mag 7 have underperformed the S&P 500, the NASDAQ, their benchmarks like the stocks. What do you make of that as an underlying current within this sell-off and the ability of the markets to stage a comeback, so to speak?
That's right. So much capital is there. The hope was that this rotation, of course, would save the overall market in the sense that if and as money came out of the leaders, it is, that the money would go into smaller cap, into value names. It did. But those would hold their gains. In fact, the small cap stocks had given back just as much, the IWM, the Russell 2000, as the Mag 7 and others. And so the reset that we've had, again, while normal, my hunch is that because of the steep and uncorrected nature of the preceding ascent before this sell-off began, that we won't escape with just a normal sell-off. And just one other thing to consider, the sell-off is so severe at this point that basically the gains on the year are almost gone. Consider that the S&P is up, 11.2% year to date, but the performance of the average stock is up 4%, and the performance of the median stock is up 4.2. So again, the index, its year-to-date performance is still so driven by those super cap mag names, and those are the ones that still look as though they're under pressure.
Are they under pressure technically, Carter? I mean, do you think that there's anything in the charts that leads you to believe that they will continue to underperform?
Yes. So the circumstance that's common to most of those is that they all had heavy volume drops and gaps. So they have been weak with the market 2, 3, 4 weeks, and then news-related earnings drops and gaps. That happened in Microsoft, it happened in Amazon, among others, and we'll see about Nvidia. But at this point, because of the severe nature of that selling, the aggressive and what you would call distribution, that's what the word is when you drop and gap and the volume's 4- and 5-fold. You don't get out of that, recover from that quickly. And so if and as those do work lower and the small cap had given back all their gains, or the so-called great super regional banks that were doing so well, all give back the gains. It doesn't feel like the setup for higher from here.
There's a lot of focus, no surprise, on Nvidia specifically, Carter, particularly when a lot of the hyperscalers came out, reaffirmed or moved higher their estimates for CapEx on AI specifically. So, the fundamentals seem to be intact, but armchair technicians will look back to June 20th to a key reversal day for Nvidia in terms of hitting a new high, then closing on the lows on very heavy volume. As a real technician, Carter, do you think we'll look back on that day and say that was a watershed moment? Because it really did sort of precede the sell-off that we've been witnessing since the beginning of July.
Yes, those are very important days. They're key reversal days, and they happen, and you're citing it exactly right, on lows, and the market had one on the low of October of 2022. What it represents is there's a crescendo, either panic selling, which is coming on the heels of selling, in this case, panic buying. Something's going higher and higher, and yet at some point, there's no one left. And then intraday, almost like a child slipping from the chin-up bar, exhausted, out of buyers, no one's left, and it goes down and down and down. We are down substantially. Semi's down some 25% almost as an aggregate, and Nvidia down. And so in many ways, what Nvidia says will help encourage the bulls, but we're still so far down, it would take a lot to recoup those losses. My hunch for the market is that the highs are in for the year.
I want to end with a bright spot, Carter, and that's a stock you think will go higher. You put out a note recently, I think, and you said you like Exxon.
Yeah, I mean, in a way, that's it's kind of a defensive name, and obviously it has two circumstances that are quite bullish. One, how much better it acts than its other energy supercap names, whether it's integrated or drillers, what have you, but also its relative performance to the S&P. And finally, this is a stock that's been in a 2-year range, has not made a new high, as of course the general equity market has. And I think Exxon's a great place to be, both as an offensive but also a defensive consideration.